In today's video, I will be sharing the basics of investing across all sectors. Now, there are not going to be images and pictures flashing before your eyes in order to stimulate your dopamine and keep you as hooked as possible. Also, it's going to be purely conversational. If I need to show you 20 screenshots and making money, click on the next button. That's the first thing. So, who is an investor and who is a trader? An investor is someone who buys shares and hold them for many years, while a trader is someone who buys and sells shares on a daily basis. Now, this video and subsequent videos will be stock market centric. That will be our focal point. So there's the difference between an investor and a trader. What is a stock? A stock is stocks are consolidated shares of a company. Notice how I didn't distinguish whether it's a private company or publicly traded company, because both of these companies offer shares. The difference is to whom they offer shares. The publicly traded company offers shares to the public, as such as you and I. You and I can gain exposure, can buy a fraction of that company, while a privately traded company can only issue shares to private investors. What are shares? Shares are a fraction of ownership of a company. So when you buy a share in a company, you are automatically a shareholder, ultimately making you the owner of that company. So when you go out and buy one share of Amazon, you are an owner of Amazon. That is ideally, looking at it from a surface perspective, you are an owner of Amazon. So like all things, he who has the most shares has more hierarchy. Like all things, there's hierarchy in all things. So he who has the most shares owns the most portion of the company, ultimately making him the owner. That's the first thing. That's the difference between shares. So at this juncture of the video, you'll be asking, how can I gain exposure to those publicly traded companies? If I want to buy Amazon, or if I see Tesla is doing so well, I want to buy a fraction of this company. Do I go to their store? Do I have to pay someone physically, or do they sell it online? How do I gain exposure to those publicly traded companies? I want to be a shareholder. The first thing you have to understand is brokerages who gives you exposure to these stocks varies across different regions. So I want you to do something now. Go to Google and search for the top 5 companies in your country. Also, that's step 1. Step 2, what are the determining factors of picking a brokerage? The first thing you want to do is identify their security measures, the security for your investment. Then the fees, at least for me, that's what I do. So in Nigeria here, there's something called the SPIC. The SPIC insures your investments for for $500,000 for each account, and also $250,000 in cash. So independent of your brokerage's future, there is a compensation plan for you. That's the first one. I don't know about other countries. That's the first. So you've understood what the stock market is. You've understood how to purchase a stock. You've understood the difference between the publicly and privately traded company. What's next? What next is, how do you identify which company you want to buy? You've registered your account, you've funded the brokerage. Like I said, the first factor is the safety of your investment. The second is fees. So I tend to go for the cheapest of cheapest brokerages. When you fund the account, there's a certain fee they charge you. When you take money out of the account, upon any transaction you execute, there are fees that accrue to it. So I pick out the cheapest and of the cheapest of brokerages. If you don't want to make the research on the cheapest of fees, simply go to YouTube. There are thousands of influencers who have done the work for you. So all you need to do is to sit down and consume this data and make the decision for yourself. I don't want to teach you what you do or say do this, do that. I'm here to empower you in order to make on how to make decisions for yourself. So that's how to pick a brokerage firm. The second thing you have to understand is now that you've picked a brokerage firm, how do you identify the companies you want to buy? Say you want to buy Apple or Amazon. Do you just click in Apple? So that's where ticker symbols come in. So ticker symbols are specifically gives you exposure to specific companies and the securities they issue. So Amazon trades on the ticker symbol AMZN. So when you want to purchase shares of Amazon, you impute that ticker symbol and you simply establish your layers. That's it. So also, I know we are going further down the rabbit hole and I'm trying to keep it as simple as possible. There's something called the Nasdaq and the NYSE. NYSE. The full meaning being the New York Stock Exchange, that's for the latter. While the Nasdaq hosts tech stocks, that is Amazon, Apple, those kind of companies, while the New York Stock Exchange holds normal companies like McDonald's, anything that's not tech. That's what the New York Stock Exchange is meant for. So the Nasdaq stocks are usually traded in a four ticker symbol, while the NYSE stock exchange NYSE are usually traded in a two ticker symbol. So that's how you identify two letters rather. So that's how you identify a Nasdaq stock and a New York Stock Exchange stock. I know that was very redundant. Yeah, so that's how you identify the difference. Although it makes no difference, it doesn't really matter, but it's just an added knowledge, if you want to. So that's sticker symbols. So you buy, they give you exposure to the securities, they give you exposure to the securities that ticker symbol issues. Those are ticker symbols. So what else would you like to learn? We've covered publicly traded companies. We've covered privately traded companies. We've covered ticker symbols. Is there anything else I want you to learn? Yes, there's one more thing. I didn't go deep down the rabbit hole when I was speaking about traders. So, traders, there's this problem with trading. Or, firstly, before we talk about trading, you have to identify what kind of person you are. Are you an investor or are you a trader? I've given you the definition of these two things. So I've empowered you to make the decision on which side you fall on. So if you're an investor, you're not going to worry much about what I'm about to share. But if you're a trader, if you decided to trade on a day-to-day basis, if you're more accustomed to the cheap dopamine of going in and out of the market, selling when it's high and buying low, then listen, there is a hidden cost to trading. Trading wears away your returns like so many swipes in sandpaper. It costs 4%, 4 to 8% round trip when you buy and sell a hot little stock. So you go in for 4%, you sell at 4%. A classical example would be if you put $1,000 into a stock, so you spend $40 before you even get started. Sell that hot little stock and you could fork up another $40 in trading expenses. So also there's something called the short-term capital tax rate and the long-term capital tax rate. Long-term capital gain tax rates are usually exercised by investors because to be eligible for this kind of tax rate, which is 0 to 15% on all your returns, you have to hold that stock for more than a year to be taxed at that rate. While the short-term capital gain tax rate could be as much as 30 to 50% of all your gains. Imagine, depending on the kind of stock you're trading. For foreign stocks, it ranges between 45 to 50%, or for average American stocks, within 30 to 40. So, imagine after trading, you fork up expenses in trading expenses 8 to 10%. You also pay brokerage fees 5%. Then imagine being taxed at 40% short term tax rate. You're left with less than half of your check. So that's a hidden cost to trading in general. That's also something you have to consider. But for someone like me, if you have the influence to renegotiate your trading expenses, then you're better off. I said trading expenses, not your tax rate. Your tax rate is fixed. You're going to pay that 30%. You can't avoid it. Yeah. So your tax rate is fixed, but the trading expenses is what is more malleable. So I don't want to overwhelm you guys. I believe you've gotten value from this video. If you've gotten value, share and like to someone. Share and like. I don't like saying this. Anyways, like the video. Help more people. See you in the next one.